In this new segment of Advisor Revelations, the DPL team will discuss how to evaluate new solutions and address current challenges and the strategies that can help you grow your firm and AUM.
Hello, everyone, and welcome to the Advisor Revelation podcast, where you'll hear from some of the DPL consultants about some of the real cases they've been working in real conversations with other advisors. Today, our topic is going to be around differentiating your practice, which I know is a hot topic for everyone, and we'll get more into that here in a second. But joining me today is one of our lead consultants, Jake Markowitz. Jake, I'll let you say hi.
Yeah, thanks, Tim. Great to be here. Really excited.
Yeah, Jake, it's great to have you on today. I know you work with a number of advisors, talk with some of our members, and also, people that are interested in looking at the DPL platform. And one thing that I hear quite often from advisors is that, it's harder today to differentiate their practice than it was, 5, 6, 7 years ago. If we just look at the landscape, right? 5, 6 years ago, it was really unique to be an RA, to work in a fee-only capacity, because back then, pretty much you had commission insurance agents, you had brokers selling, commission mutual funds, and then you had this small minority that were, fee-only RAs. But, Jake, as you're talking to advisors today, do you see more and more people are kind of moving to that fee-based, fee-only type model?
Yeah, absolutely. More and more of the conversations I'm having are people who just left the broker-dealer space to go fee-only, or they've been in the fee-only space for a while. And, to your point, that's one of the main initiatives I'm hearing from advisors too. How can we differentiate ourselves, right? How can we differentiate ourselves to maybe acquire new clients or even acquire new advisors?
So, Jake, one thing I want to talk about for a second is, for advisors that aren't currently offering insurance as part of, one of their core offerings, it sounds like for a lot of times the strategy is, they might have a referral partner, or, if the client has a buddy that's an insurance agent or something like that, they'll let the client work with them. But like I mentioned a second ago, it seems like now that everybody's adding credentials, right? Everybody's getting their CFP. You got, State Farm having a financial planner in the same office as the P&C agent. What type of risk have you heard from advisors where, allowing their clients to do in the past what was totally fine because they weren't a competitor, now they're a competitor? Have you heard advisors having some hesitancy over, letting clients just work with these, classic insurance agents now instead of keeping it in-house?
Absolutely. And this is one of the bigger reasons why people first start talking to me about DPL and using annuities and insurance, because we always hear the horror stories of referring out in the past, right? When it was just an insurance agent, right? You refer out maybe for term insurance and they come back with whole life and an annuity. Well, now there's another horror story to add to there, where the insurance agent can also be just a full comprehensive financial advisor. And an advisor that we actually onboarded last year, this is why he wanted to start talking to us, because he referred out a client for just an annuity. Well, it turns out now it's no longer his client, right? Because the client really enjoyed the conversation with that agent. It's not even an agent anymore. It's a full comprehensive financial advisor. And so advisors are utilizing us where now they can tap into those assets and review those assets and keep them in-house. So the conversations are just A to B, right? With the client and the advisor, versus bringing in this third party and running the risk of losing the asset, losing the client, or maybe the client comes back, but it wasn't the intentions that you set out to send the client to the insurance agent for. And so now it just keeps it an A to B conversation where the client just has one advisor. More importantly, you retain those assets under your assets under management, where you can also make revenue from that. And so it's a really clear differentiator from the advisors maybe down the street that are referring out, because you are now being able to handle all those conversations yourself.
Yeah, and this reminds me of a stat I saw the other day from Cerulli. And the stat was that the average client works with 3 people with regards to, their financial plan, their financial advisors, let's call them. One's the 401k administrator, which we know is not a big threat, could be in the future, but today it's not really a big threat. The second is the insurance agent. And then the third is the financial planner. But what happens though, that's all pre-retirement. Once a client moves into the retirement phase, pretty much everybody consolidates down to one. So, looking at it that way, right? Pretty much the 401k advisor is probably out the door when you retire. Most people rolling out to the IRA. The client has a relationship with 2 people they have to pick from of who they want to consolidate their assets with. So it sounds like one way that you've worked with advisors is you can get rid of that insurance agent. So now when it comes down to time to consolidate money, it's all going to go to the advisor. You don't have to even worry about that insurance agent. Is that some things that you've seen?
Yeah, absolutely. And it's a way to just get rid of the competition altogether, right? It's just you. And even that advisor that I was referring to as the example, this was a client that he was very confident. He was the only one talking to, right? Because the client's not going to tell you if they have other people they're talking to, of course. Well, now it's no longer his client. So as comfortable as you may be, it doesn't hurt you to really make sure that you're clearing out the competition, that you are handling the full comprehensive financial plan so you can maintain that client, helps retain the client and acquire new ones as well.
I mean, because keep in mind when you buy even something as simple as a term policy, the client has to tell the insurance company how much money they have, basically how it's invested roughly in the insurance product. So basically, even if a client is just buying a term policy, the amount of information they have to give that insurance agent is everything they need to basically understand the client, to have the ability to start going after some of the other assets. So, don't even trust the guy that's just selling term, right? Because they're going to have all the information. It's a great thing. So if you're not offering it today, insurance in general, do it just to keep the competitors out. You don't want to invite the fox into the henhouse.
Yeah, absolutely. For many firms, that is a big missing piece. And it's a piece that's needed too, because, the annuity insurance marketplace is really rather large, right? The annuity landscape is a $3 trillion market. It's larger than the entire RIA space, right? So this is a pillar that needs to be in place, and advisors are realizing this, that now they can. One of the reasons why maybe they did in the past is because they couldn't, right? If they're fee only, there's only these commission policies, they couldn't add it to the plan. But more and more clients are asking for it, right? Clients are asking for what these types of products can provide for them, whether it be guaranteed income. Maybe it's principal protection. Maybe it's legacy protection. There's goals that the clients need these assets in place for. And now that there is the fee only side of annuities and insurance, it's a big pillar that advisors are now able to tap into and really complete all the holistic financial planning, but have those conversations with clients that maybe they couldn't in the past.
Yeah. So it sounds like at the very least, if you're an advisor and you're not offering insurance planning, it sounds like you should add that just to be on the same playing field as the other advisors. Let's kind of take it a step further here. How can you differentiate in that space? Because, if you look at it on paper, it's really difficult to differentiate with regards to how you manage money, because pretty much everybody's using low-cost funds, whether it's ETFs, mutual funds. Everybody's using those low-cost options. Not many people are out here trying to beat the market. Most people are just trying to get market returns for their clients, right? So they're charging a fee just to get the market returns. And, definitely financial planning, a lot of CFPs out there now, and there's definitely different degrees there. But let's look at the insurance topic in particular, because it seems like what you're talking about today, Jake, is there's these new versions of these commission-free products. It sounds like that might be a really easy way to differentiate, because it sounds like, what most people do, insurance on commission, and through DPL, they have this commission-free option. So just talk to us a little bit about how you've seen advisors maybe think about differentiating with this part of their business to look different than all their competitors.
Yeah, and it's usually the first conversation I have with many firms, because there are a lot of clients that have these old commission policies that maybe have high expenses, or even if it was accomplishing a goal, maybe goals have changed and we need to reevaluate what's in place. And so what they've talked to me about and use some of our tools for is analyzing what's in place and comparing those old commission policies to the new commission-free landscape. And we actually have a tool where you're able to just plug in the statement, and we can actually evaluate how the current annuity is working, how it is working towards our goal, and then compare it to the commission-free landscape. And what you'll see from this tool that we're able to generate is a side-by-side comparison, saying how much more income we can provide a client, how much more accumulation we can provide a client, and also more importantly, how we can reduce the fees. And one of the biggest reasons we're able to do that is simply by stripping away the commission, right? Commission is one of the biggest expenses for any insurance carrier. And many advisors that your clients may be talking to are still offering up these commission, high expense, low liquidity, maybe lower benefits products. So what we're able to do is strip away the commission and now look at these products that are completely repriced in favor of the client. And really, it makes it clear as day in a visual presentation for the client this is what I'm able to do for you as your advisor, right? I'm able to strip away all these costs. I'm able to increase the income, I'm able to, increase your accumulation depending on what the goal is. But it really makes it really clear as day how your practice is different and how you're able to improve the end outcomes for that client.
Yeah. So it sounds like, if you're working with a prospective client and maybe they came from one of the traditional broker worlds, it's very likely they were sold some type of insurance product, right? Pretty much these insurance brokerage firms, everybody gets an annuity, right? Pretty cookie cutter.
Right, absolutely. And this is actually a timely question because I actually was just working with the firm on this where they had a client who was working with an advisor who was in the broker-dealer space, and they're looking at these old commission annuities. Now, this was a prospect. The advisor didn't actually have this client yet. He was looking for ways that he could actually acquire this client, and he needed to deliver value. And so we took him through our evaluation process where we looked at the policy that was already in place, the commission policy, and compared it to the commission-free landscape. And then the advisor was able to present his findings for the client and really showed, hey, again, this is what I'm able to do for you. I'm able to reduce the cost. I'm able to more efficiently produce income in this client example. And just from that presentation, he was able to acquire the client and now open up, the financial planning conversations beyond annuities and insurance. But this was a great stepping stone for him to acquire that client and differentiate his practice from the advisor that the client was already using.
Yeah, no, that's great. This also reminds me of a case that we worked on here a few months back where it was a large client, it was a $15 million client. And this advisor was a DPL member. So they knew about the commission-free products. They had access to the tools on our website, the whole 9 yards. Well, this $15 million client, they had $3 million tied up in old legacy annuities. But there's $12 million in managed money there. So this client, with most larger clients, they interviewed multiple advisors, went to 5 different advisors. And it's interesting, most of the advisors that the client interviewed, they had their eyes on the $12 million in managed money, talking about how they could do a better job with it with lower costs. Some were active managers. They were all giving their pitch on the $12 million. But everybody except for the DPL member ignored the $3 million that was in the annuity. And who won the client? The RA that addressed the annuity and had a plan for the annuity. So I think exactly what you're saying, Jake. I think one thing that's really unique in a way that you can differentiate is when you are working with a prospective client, you might be the only advisor that actually addresses the annuity, that actually gives them a plan for that actually talks them through how there could be a better option. Don't disregard the fact that it might be a small part of the asset. It might only be 10, maybe 5, 20%, whatever it might be. It's going to be a very small part of the portfolio. But if you're the only one that actually addresses it with a plan and then you have this commission-free solution, that can be a huge way to differentiate yourself. And it sounds like you see that as well, Jake, all the time, right?
Absolutely. Day to day, we're seeing this. And, to your point, a lot of advisors maybe are avoiding that conversation because of what we were talking about at the beginning, where, if you're a fee only advisor, you had to avoid the annuity insurance conversation. Now you don't need to avoid. You can actually, open that conversation with welcome arms because you know that you have an evaluation process that can immediately and really efficiently deliver value. And to your point, deliver value in a way that other advisors are completely avoiding and not talking to the clients about. And it really can put the light bulbs on for a lot of clients to realize, wow, this is the advisor I need to be with. They're talking on things that I've never been talked to about, right? They're delivering goals that I've never had delivered on. So it really is a really fast way, and immediate way to deliver client value and differentiate your firm.
So obviously, once we get the client, this is a great way to differentiate in that meeting. So we can talk about how they have access to these, commission-free solutions. But let's talk for a second, though. What about from a marketing perspective to gain new clients? Mm-hmm. I've heard some different strategies that some of the other consultants have implemented, but, your firsthand experience, tell us an example of an advisor that you worked with that used DPL to market in general to the mass audience to see, how they were able to, maybe get more prospects, at least to self-identify that they wanted to take a look at their firm.
Yeah, absolutely. And that's a big way that we've been working with firms, specifically using our marketing pieces to market what these new commission-free repriced products can deliver for client value. We've been talking about, comparing commission-free. So I'll use a different example this time, timely conversation with the current market, right? Where equities are down, bond funds are down, cash is yielding nothing. But so clients have a lot of money in these more conservative allocations, and they're hearing from a lot of advisors that really there is no good outlook. There's nowhere to put the money right now. And so one of the advisors I worked with use our marketing piece on using annuities for principal protection, where there's actually is an alternative, right? Because I'm sure clients are hearing from advisors, there's nowhere to hide. Well, there's actually a potential option where you can still complete that principal protection, but actually add some guaranteed return, actually add a positive value, a positive conversation for the client. So the firm took this marketing piece and sent it out to all their prospect clients and even their current clients. And suddenly people were knocking on their doors, or I guess in 2022, we're not knocking on the doors. People were calling the advisor, right? And actually opening up the conversations because this was a new idea that they haven't heard before. Again, fee-only advisors for the longest time were avoiding annuities, and they've been hearing from their advisor that there is nowhere to hide. Well, this is actually a potential option for them. And these clients were calling this advisor with a lot of excitement because they finally heard that there is a way to get a positive outcome here, a positive return. And so that really helped acquire new clients and continue conversations with us as well.
Yeah, that's spot on, because every time you look at the news, you look at any, the Wall Street Journal, you look at any of the investment articles, it's always about, negativity towards fixed income. And these are things that clients are reading about. And, I know some people have looked at different, alternative investments, different, let's just call them exotic investment choices as a way to diversify away from yields, but they end up taking on more risk, which, especially given the turbulence we've had recently, taking on risk, would not be the appropriate decision there. So it sounds though, Jake, like you're hearing from advisors that they're essentially marketing that there are other ways to manage this risk through annuity solutions, and I guess help us understand, if an advisor's never used an annuity before ever, I'm sure they're probably thinking in the back of their mind right now, there's some reputational risk, right? So if I go out and I start blasting or add annuities to my newsletter, are my clients going to think I'm the classic insurance salesperson? So if you've heard everything we said today and you've reached that point, what advice would you have for that person that says, this sounds great, but I'm really afraid for my reputation's sake to put an annuity out there in front of my prospects? What advice would you have for that person?
Yeah, absolutely. And we can always work on the messaging, but really, this isn't something to be fearful of. And many times when, clients hear annuities and they think that four-letter word is because they're tied to, high cost, low liquidity. Some of these options that we have now on the commission-free side, they actually have no cost and very high liquidity. So this is a much more positive conversation, an easy barrier to get over with clients. But this is something where you can, talk about just what the benefits of the annuity are before just flat out saying this is an annuity product, right? You can say this is a product that can give you principal protection with a higher rate of return, right? And open the conversations that way, and then talk about the commission to commission free repricing, how this is a completely different landscape than maybe the client heard of in the past. A lot of advisors have brought up the exact same concerns that you were talking about, Tim, and really just explain the difference from commission to commission free really ends that barrier for clients. Just hearing how the landscape has changed, how this is more a fiduciary landscape where the advisor is not making a commission, right? They're getting paid the same way that they're getting paid outside of annuities and insurance. It really isn't that hard of a conversation as it once was in the past because of that.
Yeah, it sounds like this is a great way to show that you're different, right? Because if you can get the client to engage in this conversation, they're going to bring up, a lot of things you mentioned, which about the classic insurance sales, the commissions, all that. So, if the client hears from you, well, here's how we're different. We do this without commissions, we do this advisory, showing the pricing through the DPL tools and whatnot. It sounds like that would be a huge differentiator if you could get a client to engage with you on that.
Absolutely. And, many times when you think of, I need to add annuities or insurance to my practice, there could be a lot of legwork, but there really isn't. For the tools like you were bringing up that we've been talking about, it's a really efficient way to look at comparisons, using the marketing pieces and using DPL for the product education. We take a lot of that work off your hand where we can educate you about these products and make sure you're comfortable talking to the clients about it, where really there isn't that much legwork and it becomes an easy way to differentiate your practice for the reasons that you just said.
Yeah, this has been a great conversation, Jake, today about differentiating. So it sounds like, some key takeaways from our conversation today. One is, if you're an advisor and you're doing everything we mentioned earlier, you're doing financial planning, you're doing estate planning, you're doing those other things, but you're ignoring the insurance piece, I think step one is you got to add that, because you got to be on the same playing field as everybody else, because everybody else is doing that. And then I think step two from that is, once you've kind of decided, hey, I need to, get back on the same playing field with everyone else, it's be proud of it and market the commission-free part, because it sounds like, like in your experience working with advisors and things that I've seen as well, where advisors are actually promoting this whole commission-free annuity, commission-free insurance as a way to differentiate. So, adding that as a part of your marketing materials and things like that. So this has been a great conversation. So some good takeaways here. And if you're listening, where you should go from here, one is check out the website. It's dplfp.com. You can go out there and check out these tools that Jake was talking about, these annuity comparison options. There's a number of resources out there that you can utilize as well. But definitely encourage you to schedule a time with one of our consultants as well. On the website, there's our contact page and you can schedule an appointment. Jake was mentioning some marketing pieces that we have available. So you have access to those. So schedule time with the DPL consultant, learn about the membership, what it means to be a member, and how we can provide some of these differentiated benefits to you. And part of that is this marketing strategy that we can help you so you don't have to recreate all these pieces. We built it all for you. So with that, Jake, appreciate you joining today, and great to hear how you've been working with advisors to differentiate their practice.
Yeah, thanks for having me on, Tim. Appreciate it.
All right. Have a great day, everyone. Thanks.
Thanks for listening. To hear more advisor revelations, go to dplfp.com and subscribe on your favorite podcast streaming app.